What's up, everybody? It's Brandon Locaron here, and today we are talking HELOCs. That's right, home equity lines of credit. So first of all, what is a HELOC? A HELOC is a line of credit against the equity that you have in your house, right? Home equity line of credit is what it stands for, HELOC for short. And the example is like, let's say we have $1 million property. I enjoy using $1 million property because it's easy numbers, right? So let's say we have $1 million property and you owe only 50% of that value. So you owe $500,000 on the mortgage. Well, you have equity of $500,000 because it's $1 million property. You only owe the bank $500,000. Well, guess what? That $500,000 that you don't owe the bank, you could tap into that and get a line of credit called a HELOC against that amount. Some banks will allow you to go up to 95% loan to value. And what that means is if they allow you to go up to 95% loan to value, they're willing to loan you up to $950,000 against your property maximum. So it would be your $500,000 first mortgage, and then your HELOC would just tack on the rest. So it would be $450,000 home equity line of credit. So that amount is something that varies by bank, and the loan to value will vary by bank. Certain banks will only go up to 80% loan to value, and that's still in this example will be $300,000 in equity, right? So some banks, especially on investment properties, aren't even doing HELOCs or home equity line of credit. They're only doing primary investments or primary homes. Sorry. So let's talk about who should get a HELOC first of all. With that being said, I don't know if you guys know this fact, but 70% of homeowners in the United States have 50% or more equity in their homes. I'll say that again. 70% of homeowners in the United States have 50% of equity in their homes, which is ridiculous, right? This is awesome. We're in a great position here if you are one of those 70%, right? Which is the majority, right? 7 out of 10 people. So, the person that should get a HELOC is someone that obviously has equity, right? If you own that $1 million property and you just bought it last year, and maybe you bought it at the height of the market, you're not going to have that much equity. So you should not get, a line of credit against your house. You probably wouldn't even qualify. The bank won't even entertain it, right? Because you just don't have that much equity, right? But let's say you've owned your home, I would say at the beginning of the pandemic or even before the pandemic, where homes felt like they increased in value by about $200,000, $250,000, you have a ton of equity. And that's why that 70% number is so big in the United States, because a lot of people that own their homes before the pandemic now have so much equity in their homes that this is what the HELOC could be used for. You could tap into that and use that to do something cool, right? So the person that should get the HELOC is someone that needs to have equity in their homes. They need to be good with money and great with making good financial decisions, and maybe have the desire to invest into more real estate, right? So maybe this is your primary residence and you're like, what, I can see ourselves buying an investment property in the future. So this would be a good fit for you. So when should you open a HELOC, right? That's probably number one question people ask me is when should I get a HELOC? Well, I think you should get a HELOC now, right? And the reason is I know rates are high. First of all, I know rates are high. HELOC rates are generally higher than than any other loan right now. Typically, I'm seeing between 8 and 10% for HELOCs. They generally follow prime plus 2, so it's plus 2%. So they are for someone that's gonna use the money. But the thing about it is there's two types of HELOCs, right? There's interest only HELOCs, and there's principal and interest. Basically you could pay off the principal on the HELOC. Now with the interest only payments, you're only paying interest only. You have to specifically pay off the equity on that, right? So you would have to make additional payments other than the minimum payments in order to start paying down the principal. The other one is principal and interest, where it's like your mortgage, you're paying it down as you go, similar to a credit card. One of the things is let's talk about the differences real quick. So the major differences in when you should get each one, right? So if you're a home flipper or you're looking for just quick hitters, like if you're going to do the burst strategy, for instance, or you're going to do flipping, then I highly recommend using the interest only, right? Because then it's going to make the most sense. You're going to pay the least amount of money, and you're going to pay that back right away. As soon as you do a cash out refinance, or as soon as you sell that property that you just flipped, you're going to pay it off right away. The other option is, let's say you're going to do long-term investments, or you're going to do a Airbnb or something like that. Then I recommend the PI, principal and interest. And maybe you're just using some of the money to renovate the property, so you could, Airbnb it. You could do principal and interest at, is what I would recommend for that situation. The payments are higher, but at least you know that you're paying off that principal every single month. So that's for who should get a HELOC and the differences with the HELOCs. Now, the going back to the when, and this is important, is like, again, I know interest rates are super high, but the thing about it is you have to understand that this is not, you don't pay any money on that HELOC until you use it, right? It's like a credit card, right? Like, unless you use that thing, you don't pay any money on it. You might pay a fee to keep it open every single year, but you don't pay any money unless you use it. And the thing about to factor in is, let's say you do use it, right? Let's say you do use a HELOC, then I would recommend that you make sure that whatever investment that you're making is going to be more than whatever the interest rate is. So, for instance, if you get an 8% interest rate, I'm going to say, hey, look for an investment that is 8% or greater every single year, so that at least you're covering that minimum payment and you're not out of pocket, right? You're not in the negative. And again, I know rates are high, but it's important to do this now, because I think there is going to be some opportunities that come up, and it's better to be ready for an opportunity than not be ready. It's funny, today I was talking to a guy who was like, they had a great opportunity to buy a beautiful lake house, and they just weren't ready, right? They just weren't ready to purchase it. And if he had his HELOC in place, then they would have been ready. So that's some of the things that, I recommend, and why I recommend doing it now, so that you could tap into that equity now. You can always close it later, but at least you know that, hey, I have this line of credit here for when that opportunity comes up, when that perfect beach house comes up, when that perfect mountain home comes up, when that beautiful lake house that we've always dreamed of comes up, right? That way you're ready to jump on an opportunity before, rather than having to scramble, right? Because scrambling, especially in this market, even though it's higher interest rates, things that are desirable are going fast. So you have to be ready. So because there's going to be opportunities that come up, you want to get it open as soon as possible, and it's better to be ready for that opportunity. Now, let's talk about why get a HELOC, right? And again, I recommend that these are for people that want to buy additional properties, or want to grow their asset class, and want to, diversify into more real estate or multifamily or something like that. Because, it's important, again, to just make sure that you have the right mindset moving forward versus the wrong mindset. Because you don't want to use the money to buy a car, to go pay off credit card bills, or maybe, I don't know, get a fancy ring or something. I don't know. So that would be the wrong reasons to get a HELOC and use it for personal items. I would always make sure that you buy an appreciating asset using an appreciating asset, right? Because then if you buy a depreciating asset with that appreciating asset, now you're depreciating that appreciating asset, and it's just not cool, right? So that's just essentially some of the basics on HELOCs. That's why I recommend it. That's who I recommend it for. Let's talk about where. So the where is probably the second biggest question we get, right? Is where do I get a HELOC? Well, don't go to a Bank of America or a BB&T or any of these big, larger institutions, because they're just not good at originating loans. And they're going to tell you no. They're going to tell you flat out no. So I highly recommend using smaller financial institutions, like a local bank, like an actual bank that has a mortgage division that is able to kind of help you through that and see your bigger picture, right? You want to use local banks because they generally have favorable rates. Credit unions are also a great option when you're looking at HELOCs, because they also give favorable rates and they're able to make fast decisions. So Navy Federal, Bethpage, who's another one, Apple Federal. We're talking about your USAA, any local bank too that's in your area. Like, a typical name for a local bank in a small town is like Main Street Bank, right? So like, look up those companies and ask them like, hey, what are your HELOC terms? What are your HELOC interest rates look like, right? I was talking to a guy today from M&T Bank, and if you need anyone's information, feel free to reach out to me. But I was talking to someone today from M&T Bank, and their rates are about 7% on a HELOC, which is amazing right now, right? Like, so if you don't have a HELOC and you want to open one, like, definitely send me a message, and I can send you his information. But these things are out there. You just have to search. I would stay local because they're going to have the most favorable terms and generally like the best people that kind of work on these things because they're making local decisions in the local economy. So that's what I would do. Next steps, I would say make sure you go out, do some research, talk to a few bankers, mortgage bankers, and say, hey, is a HELOC a good fit for me? You are going to have to qualify with your credit. But again, I think it's better to be ready for an opportunity for when an opportunity comes up rather than not be ready at all, right? So hope you guys like this video. Hope you understand a little bit more about HELOCs now. If you have any questions, just feel free to comment and subscribe, and I'll see you on the next one. Take care.